Chief Economic Advisor, thank you so much for joining us here this evening. We've got a packed audience here in Mumbai and we were hoping to have you join us in person, but we understand that the GDP print is a much more significant event to deal with. So let's get started with that, sir. The number coming in at 6.7%, a tad below the CNBC-TV18 poll of 6.8%. For the benefit of our audience who are here in the room and those who are watching, explain to us whether this is materially the election impact that's played out on the GDP print and whether you believe that growth continues to be robust going forward.
Thank you, Shereen. First of all, I would have also very much liked to be there, and therefore my apologies for not being there, and also my sincere thanks for you and the organizers to accommodate me to be able to participate in a virtual mode. No, regarding the GDP print, I think first of all the good news is that there is an alignment between the production side and the demand side. And most components of the demand side have held up very well and have expanded compared to the first quarter of last year. And as you said, yes, the election season might have had a hand in it, because government final consumption expenditure as well as and also gross fixed capital formation would have probably moderated in the first quarter compared to the previous quarter, leading to this compared to the previous year's first quarter, leading to the slight slowdown in the growth rate. But as I mentioned in my press conference that concluded a little while ago, I think the broad momentum of the economy remains very intact, and I think we do expect that with the monsoon having been good so far, hopefully it doesn't turn out to be too much of a good thing. I think we can look forward to gradual improvement in the GDP prints in the coming quarters.
You know, you spoke about the fact that we should expect a gradual improvement. 7%, is that the expectation now on a sustainable basis, CEA? And also, you know, you talked about the monsoons. That was one of the red flags that you'd highlighted at the time of the presentation of the economic survey as well as the budget. But that concern is less of a concern today, and that's the indication that we get from industry as well. And you kind of alluded to that. If that's less of a concern today, is there something else that's overtaken monsoons in terms of concerns?
So sorry, I just didn't hear which concern of the various risk factors that I highlighted during the economic survey presentation.
The monsoons, sir.
Which one you're referring to?
The monsoons.
Yeah. So thank you, Shereen, for clarifying that. I think monsoon deficit is no longer a concern. If anything, you know, as a news report in today's Business Standard points out, if monsoon were to overstay its welcome, and in terms of first of all, we now know that deficit monsoon divisions, out of 36 monsoon subdivisions, the deficit divisions have become very, very few in number. And there is a large number of monsoon divisions which have had a normal rainfall, which is plus or minus 19% of the long-term average, and that's a good thing. But there are also quite a few subdivisions that have experienced excess and a very few large excess. I think if as we head towards late September, October, if the monsoon is still active, that might have some spillover effects on the harvest of the kharif crop. So that we need to watch out for. But at the moment, the good news is that the reservoir levels are much higher than last year's, as well as the average of the last 10 years. So that's a good thing. So I must say, therefore, on balance, the concerns with respect to monsoon have probably subsided than what it was when I made the presentation during the economic survey. But nonetheless, I think we are comfortable at this point here in Delhi to maintain the fact that our expectation for the full year's growth will be between 6.5% and 7%, and we don't intend to make any change at this point. We'll wait to see some more data for the second quarter before we can form a more definitive view on where the final outcome might end up edging towards or leaning towards.
You know, you said the deficiency of the monsoon is less of a concern today. So let me address some of the concerns that you might be thinking of today. And you kind of alluded to that in the North Block's monthly economic report that is released. And that's based on what the RBI surveys are suggesting, both in terms of consumer confidence as well as manufacturing. Any rising concerns on both?
Yeah. No, not rising concerns, and I think the fact that the consumer confidence headline index declined, and also we saw perceptions on employment from consumer side, which had improved very steadily from the very low levels reached during the COVID pandemic, had shown constant improvement, and we would have liked to see that head into positive territory. But I think the consumer sentiment on employment, consumer perceptions rather on employment turned negative, and it was a negative in the June survey of the central bank of consumer confidence, and in the August survey as well. Of course, it is not necessarily the case, therefore, that there is less optimism on jobs per se. It may well be the case that there is less optimism on the kind of jobs that people are looking for, and therefore the kind of jobs that they were getting. Hopefully the budget's various incentives on job creation in several sectors, particularly focused on manufacturing, will bring consumer perception on employment back to positive territory. So that is one area of concern, and also the industrial outlook, because I think while capacity utilization is very high, and we saw in the first quarter GDP data that private consumption is holding up quite well. Nonetheless, there are concerns in the industry about dumping, about excess capacity in China, for example, and that might also make them a bit cautious going forward about production, accumulation of inventory, and their capital expenditure plans. So in that sense, it was quite heartening to see the RBI monthly bulletin of August, which shows that private sector has been raising money as good spending plans with investments in the next several years. So hopefully both these indicators are temporary and short-lived rather than harbingers of a trend.
You talked about the fact that we are probably seeing dumping on account of the excess capacity in a market like China, and that potentially is impacting sectors back home in India. Do you believe it is time for further intervention? We do see the government regularly intervene by way of duties and so on and so forth, but do you believe that there is a case for intervention, and if yes, in any specific sectors that you believe have been identified or on the watch list today?
So Shereen, I must say that the audio is a little bit on the lower side. I don't hear everything very clearly, what you are saying. But nonetheless, I think if I'm not mistaken, you alluded to the question whether we have identified which sectors are particularly vulnerable to this issue of excess capacity and dumping. Was that the question?
That's correct. And if you believe that intervention by the government is warranted today.
Okay. That is difficult for me to say. It's premature at this stage, and I think the exercises are going on, and I'm sure the industry will also be giving its feedback, and therefore it is not fair on my part to comment whether at this stage there is a particular action that is warranted. But we should be aware that the last time when we had a non-performing asset cycle in India between 2012 and 2018 or 19, apart from many factors, one of the causal factors was post-2008 financial crisis, disappointment in global growth, and the stimulus that China gave post-2008 crisis also led to massive excess capacity and dumping of steel, for example, which had an impact on global steel prices, resulting in distress in several steel companies in India. That is sort of a memory from the past that we should not forget, because the implications of this may well go beyond capital formation, inventory accumulation, slower GDP growth. We also want the current financial cycle in the country to last longer, and therefore we need to examine this phenomena from multiple angles.
Well, since we're talking about trends that we need to factor in as an economy and as a country, the big topic of debate here at the Banking Transformation Summit (CEA) is the issue of deposit growth and deposit mobilization, and what that means for India's banking sector. And this is something that the survey also talked about as a potential cause of risk and the move that we've seen towards the capital markets, for instance. In that context, I want to also bring up something that you tried to dispel, that the fall in household savings was not a sign of distress, but was a sign of diversification. So how do you see this playing out in the long term, and what are the implications for India's banking sector as we see this challenge of deposit mobilization and deposit growth?
No, I think I have very little to add to the excellent articles that have appeared from several of my friends in the industry, and including by Vivek Kaul in Mint today, on the misunderstanding and the misperceptions on deposit growth and credit growth. And Vivek correctly refers to the Bank of England paper published in 2014 that loans create deposits, and even if investors are but the public is shifting to capital markets, I think the money eventually comes back into the banking system as deposits. So I think it has different causal factors. I don't think the inclination of Indian public to save via the capital markets is the reason for low deposit growth, because then one needs to look at money creation in general having a role in deposits growth. So I think this is not the right framework to examine the widening gap between credit growth and deposit growth. Now, as far as the household savings are concerned, in fact, not only the case that households have been diversifying and from financial assets to real assets, it is also the case that our measurement of financial savings may be on the underestimation side. I think right now the capital market regulator and the central bank are engaged in an exercise of looking at it and seeing whether we are capturing all the primary and secondary market investments, mutual funds, single stock investments that Indian public is making in our overall measurement of financial savings. So the issue that has been flagged may very well lie in the inadequate capture of the data rather than a real problem with household financial savings.